Over 16 years, the Dutchman remembers the historical acquisition.
I remember it very well. It was a very emotional day for a lot of the employees because of the unknown. People knew about IBM, very respected, well-known brand name, and they had no idea what Lenovo was. They didn't know about China, they'd heard some things. But the fear of the unknown was definitely there at that particular point in time, yes. So it's all green. All the indicators are green.
Heading up Europe, Middle East, and Africa at that time, Van Dal spearheaded the integration in these markets.
I spent a lot of time traveling around Europe at the time, talking to people to give people the impression of what it would be like, the things that they couldn't do before, because clearly the IBM PC division within IBM was not at all strategic anymore. And then very quickly, after Yang Qing traveled the world and we all met and we had a lot of planning sessions, they started to understand that things that were not possible before were very much possible.
What were some of the challenges involved integrating two very different companies?
Well, there were lots of challenges, particularly from day one onwards, and that was the language. I mean, first of all, the people in China hardly spoke any English, and of course that didn't help in terms of integrating, because it starts with communication, getting to know each other. So Yang Qing made the decision very, very early on, from day one, that English was going to be the official company language. And the second step was that he sent a lot of executives onto Harvard, Stanford, quite a few courses to understand the Western way of thinking, understand the Western way of running a business, and how to blend the two cultures together.
Though profits spiked briefly in 2008, integration was rocky, running straight into the global financial crisis, which slammed PC sales and dropped Lenovo's market share to less than 7%. Lenovo downsized, scaled back its push into developed markets, and refocused its attention on China and other emerging markets.
The crisis hit, and some of the imbalances or things that we needed to work on became immediately visible. Not only the integration, but also that we didn't have our business models right, we didn't have the right product portfolio. So we decided to scale back, as 08-09 was a very tough year for everyone, including for us, and we lost quite a bit of money. And then we refocused on our protect and attack strategy. It was really that point in time where we laid out that we wanted to be strong and continue to build on our strength in China, and started to leverage our enterprise business and the IBM brand name in our enterprise markets, global accounts in Western Europe, US, and we make a lot of money. We have a very good brand position.
Has the strategy paid off?
The strategy has paid off phenomenally well. So let me show you this. So this is the latest.
Sales hit a record $30 billion in the last financial year, but analysts say the slowing PC market could hurt growth prospects. Just recently, the company announced a push into emerging markets by announcing it was going to buy a deal into a Brazilian electronics company, CCE, for $147 million. What sort of growth is this acquisition likely to give Lenovo in Brazil?
Well, again, it fits beautifully well into our protect and attack strategy, because, like I said, right now we're #1 in China, we're #1 in Japan. We are very strong in many developed markets or very big emerging markets. Where we are, however, not very strong is in some of the markets that are fast growing. I mean, Brazil has now overtaken Japan as the #3 market in the world, but we're only #8 or 9 in the market, which, if you want to become the largest PC vendor in the world, you have to at least be 1 or 2 or #3, one of the top 3. Now, in those markets, it becomes very important that you have local presence, that you work with partners who understand the culture, government regulations, that have local manufacturing.
How did you find CCE?
Well, you know, you talk to many people and you understand the industry, and the more you understand about emerging markets, the more you understand that some of the local players are maybe not wanting to even be around a couple of years from now. But clearly, it fit into our strategy. And not, by the way, only because of our PCs, but also because CCE is very strong in the C class of the market. There's a very fast-growing mid-class in the market, so hence it gave us a phenomenal head start that would have taken us a long time.
How much of a head start are we talking about?
Oh, phenomenally important for us. I mean,
what sort of growth are we looking at?
It will double our size in the market, which is still relatively strong. They're not a super large player. They're about 3.5, 4 points, so we get to 7.5, 8 points of market share. But they have a brand which is very good in the consumer space and manufacturing facilities, both for smartphones as well as for PCs. So that will give us years acceleration.
How do you see integration coming along?
Well, we're very experienced with integration. Right? This is the 3rd time we've made an acquisition under my responsibility. We've done Medion in Germany, NEC in Japan, both which have gone incredibly successfully well. So this one, we know what to do. We know the structure, what it takes. We know lessons learned.
How soon will the deal be earnings accretive for Lenovo?
Well, you know, that I would say that as they are making money, it will be immediately earnings accretive, right, for us. So share accretive, earnings accretive. They're a relatively small player, but it gives us a strategic position. And from there, we can accelerate our growth. And we don't grow without making money. And clearly in Brazil, there's a tremendous opportunity ahead of us for us to be able to do so.
Will the deal finally make Lenovo profitable in Brazil?
It takes a while overall to be profitable, right? Because we want to invest.
How long is a while?
Short period of time. In the PC business, a long period of time to me means like a couple of quarters where you have to get your act together in the markets that you want to focus on. But we want to go really fast in those markets, and not just PCs, but also smartphones, which is very important to us.
So you're confident CCE will help you be profitable in Brazil?
Well, we're very confident that the acquisition of CCE and the integration of the two companies will move very fast, will help us to increase our share position, and with volume comes profitability. And we're very, very confident that over time we'll get there.
In terms of acquisition targets, which part of your portfolio would you like to strengthen further? What are you looking to acquire next?
I would say we're always looking at all the opportunities that are there in the market, but when you look at the business areas that make sense, that is still PCs. I mean, it's very interesting that you asked that question, because a lot of people say the PC is dead or growth isn't fast enough. We really believe that's a temporary setback in growth. And when you look at it this year, the market will see about 350 million PCs being sold, according to IDC. But when you look at 2016, IDC, it's their numbers, not even mine, say that over 500 million PCs will be sold. So there's still growth in our core business. And we still have a lot of markets where we're relatively small. We will grow organically, but also we're looking, of course...
Will the acquisitions take place mostly in emerging markets, where the growth is for you?
Again, it really depends. I mean, our strategy focused on both mature as well as emerging markets, because that is really the balance that we believe in. So we're looking at all options that help us to facilitate that strategy. It's never about acquisitions in and on themselves. They're really a means to an end, and not the end in and on itself, right? So they're instrumental, and that could be both in mature markets, developed markets, as well as in emerging markets.
Okay. You're hedging your bets there. You do know that, right?
We always do. Well, it's about balance. It's always about balance, yes. We believe so.
The company's push into emerging markets in Asia Pacific and Latin America comes at a time when the global PC market is falling, demand is weak. How confident are you that there is enough growth in these emerging markets to help you offset the weakness you're seeing in the mature markets?
We're very confident about that. And again, that comes from our position that we are very strong in certain markets, but we're still relatively small in some markets, or small in some segments in market. Right? There are some markets where we really have a very small share, like Indonesia. It's a huge market, more than 200 million people, very young population, very healthy GDP growth. Our PC position is relatively weak. Smartphones are taken off in an unbelievable way there. So there's a tremendous opportunity to create another India growth scenario. We've gotten from India, which is a very similar story, from nothing to number one. For 2 quarters in a row, we've now been the largest PC vendor in India. Tremendous market, tremendous opportunity, not just PCs, and not just in the big rural areas, but also the, let's say, big cities as well as rural areas, right? So distribution-wise of PCs, lots of opportunities, and also smartphones. And then look at mature markets. In mature markets even, where we're doing well, we're now number 4 in North America. We're very small still in consumer.
You feel confident also about growth in the PC market. Is it likely to get worse before it gets better? When do you expect to see a full recovery in the PC market?
I think it's going to take a while, and it depends on a couple of factors. First of all, of course, the macroeconomic situation, both in North America as well as in Western Europe. And when that starts to come back to growth again, there will be growth from China, etc. That's number one. Number two, smartphones. Tablets are taking or eating up some of the PC sales, right? So there's more competition for the same consumer dollar. However, that's also why our strategy aligns with those opportunities. PCs, smartphones, smart TVs, and not just in mature markets, but also in emerging markets. And again, that's why I'm not worried about growth at all. But it's going to take a while before everything comes back. And then finally, Windows 8 that's just been launched. How quickly is that going to really pick up in consumer? We believe it will, because it's a completely new interface, a user interface, which we believe with touch is really going to drive consumer demand. But how quickly is that going to go?
So when do you expect a full recovery? You haven't answered my question.
I would say 2 years. I think then the world will see a more stable and recovered situation. But if I would know that answer really certainly, I would be in a different business probably. But yeah, I would say within a 2-year time frame, there will be a significant improvement. Whether that's a full recovery, I don't know. But it will look different from an economics point of view.
Stay with us. is up next. Lenovo's Asia-Pacific boss talks about the group's aggressive foray into smartphones. Managing Asia will be right back.